Welcome back to Talksy, where we bring you the hottest news as it breaks. First up, get ready for a seismic shift in the crypto world as MEXC launches its revolutionary Futures Earn product, a game-changer for startups looking to boost passive income without sacrificing trading power. We're breaking down exactly how this innovation could redefine financial strategies for businesses in the digital asset space. Next, we're heading across the pond to France, where a day of rage is set to erupt, exposing deep cracks in the Republic's foundation. We'll explore the massive protests and strikes against austerity measures that are crippling workers and retirees, revealing a nation teetering on the brink of social implosion and questioning the very fabric of its social contract. Then, we're back to the world of finance, but this time with a regulatory bombshell. The SEC has just slashed requirements for crypto ETF applicants, and analysts are predicting a massive surge, potentially doubling the number of crypto ETFs available. We'll dive into what this means for investors and the future of digital assets on Wall Street. And in a more personal update, we have a special dispatch from New Day Cafe, where the community is gathering for a unique photo diary. While the usual daily dose of news is on pause, this intimate look promises a different kind of connection. Don't go anywhere, we've got all the details on these stories and more. Hit that like, subscribe, and ring the bell. Capitalizing on MEXC's Futures Earn, a new day for startups. Startups in the volatile crypto space often face a tough balancing act, maximizing returns while maintaining crucial liquidity. MEXC's new Futures Earn product aims to solve this dilemma, offering a novel pathway to passive income without hindering active trading operations. This innovation could significantly reshape how small fintech startups approach their financial strategies. Traditionally, crypto traders faced a stark choice: lock up funds in yield-generating products or keep them in futures accounts, leaving margins idle. MEXC's Futures Earn eliminates this compromise. Now, funds in futures accounts, including margins for open positions and assets in pending orders, can generate interest while remaining fully accessible for trading. This dual functionality is built on three core principles: accessibility, rewards, and comprehensive coverage. MEXC has removed minimum entry thresholds, making the product available to traders of all levels, from beginners with modest capital to seasoned professionals. The platform also features a dual reward system. Users earn a base yield on their account balances and an additional bonus yield based on the notional value of their open positions. This means that as traders increase their position sizes, they can unlock higher annual percentage rates, APRs, effectively rewarding active engagement while capitalizing on dormant funds. Currently, MEXC supports USDT and USDC in its Futures Earn product, with plans to expand to coin margin products. For startups managing treasury assets, this flexibility is invaluable. The earning mechanism is designed for simplicity. Daily returns are calculated based on snapshots of account balances and average position sizes, with the interest automatically credited to user accounts. The base APR applies to all USDT and USDC balances in futures accounts. The bonus APR, however, scales with the notional value of USDTM and USDCM futures positions, incentivizing larger trades. This dual reward structure allows startups to generate passive income from idle capital while actively participating in the market. It can be particularly beneficial for crypto payroll solutions, helping startups manage operational costs and offer innovative payment options, especially to unbanked populations. The yields generated can also help offset market volatility, ensuring financial stability for payroll obligations. In essence, MEXC's Futures Earn is a significant development in the derivatives market, offering a powerful tool for fintech startups to optimize their financial returns. As the cryptocurrency landscape continues to evolve, adopting such innovative solutions will be key to distinguishing successful ventures. Don't go anywhere, because what's happening in France is about to blow your mind. And later, we'll break down the SEC's surprising move that could flood the market with new crypto ETFs. New Day Cafe, Barnes & Noble. This week, the New Day Cafe community is shifting gears, offering a unique departure from its usual daily news cycle. Instead of a typical report, the focus is on a personal journey and a special photo diary. The creator is embarking on travels that will eventually lead back to Georgia, with an initial stop at a remote, off-the-grid cabin in northern Washington, devoid of internet and phone service. Due to the cabin's isolated nature, the planned bicycling adventure episode will be replaced by a photo diary. The creator plans to check comments later in the day, assuming the travels proceed as scheduled. For those who might spot a spelling discrepancy, the creator clarifies that the topic isn't related to the well-known bookstore chain, but rather a tribute to wooden structures and a beloved late pet, Noble Fur, whose previously unpublished photos will be featured. New Day Cafe is described as a daily community diary that welcomes a regular core group as well as newcomers. The community guidelines emphasize a positive atmosphere, with personal attacks met by scorn and repeat offenders facing severe consequences. A notable community consensus prohibits the posting of images of Dear Leader. This shift to a more personal, visual format, focusing on nature and a cherished pet, marks a gentle pause in the routine, offering a different kind of engagement for its followers. But before we get lost in personal stories, we're heading back to the global stage for some serious political unrest. And get ready, because the SEC is about to make a move that could change the ETF game forever. France on fire again. A new day of rage exposes the republic's crumbling facade. France is once again gripped by widespread protests and strikes, marking a significant escalation against austerity measures that are severely impacting workers, retirees, and vulnerable populations. A planned day of rage on Thursday, September 18, sees unions across critical sectors mobilizing, highlighting deep-seated discontent that challenges the nation's image of stability and social justice. Despite official rhetoric about democracy and human rights, internal fractures are becoming increasingly apparent within the French Republic. The resignation of Prime Minister François Bayrou, whose harsh austerity plan faced intense public backlash, has failed to quell the unrest. His successor, Sébastien Lecornu, appears committed to the same economic policies, framing them as necessary for Budget 2026. This continuity has only fueled further dissent, with workers, teachers, medical staff, and pharmacists viewing the new budget as a direct threat to their livelihoods. The nation, once a proponent of the welfare state, now grapples with a torn social contract. The situation is more than just labor disputes. It reflects a country on the verge of social implosion. France's significant debt and deficit have compelled it to adopt stringent public spending cuts dictated by Brussels, exposing a stark contradiction between its international advocacy for justice and its domestic policies. Prime Minister Bayrou's controversial proposals, including the elimination of public holidays and wage freezes, revealed deep-seated issues within French politics, leading to the government's collapse and further eroding public trust. Unions anticipate over 1 million protesters nationwide, with major disruptions expected. In Paris, public transport is set to be paralyzed as 4 major unions strike, Air France faces mass cancellations, and nearly 90% of pharmacies will close. 1 in 3 teachers are striking, and even private clinics are halting services, indicating a comprehensive shutdown driven by widespread discontent. French unions, now unified, are rejecting the government's cruel plan, demanding an end to austerity and accountability for failed governance. Even minor concessions, like retracting the plan to scrap 2 public holidays, are viewed as insufficient, as the core budget cuts to unemployment benefits, public services, healthcare, and wages remain. The potential abolition of the 5th week of paid leave further exacerbates tensions. France's international image as a beacon of democracy and moral values is increasingly contrasted with its internal struggles. High debt, social division, political instability, and an inability to care for its own citizens. The reliance on austerity measures, driven by European economic policies, is seen as sacrificing the weakest segments of society. The upcoming Day of Rage serves as a critical warning, signaling the end of France's era as a social state and its transformation into a republic marked by austerity, unrest, and disillusionment. But the political turmoil in France is just one piece of the puzzle. the world of finance is also undergoing a massive shakeup, and will soon reveal which crypto-related news is setting the internet ablaze. Analyst expects crypto ETFs to double on new SEC rule. The U.S. Securities and Exchange Commission, SEC, has significantly lowered the requirements for spot cryptocurrency ETF applicants, a move that analysts predict will lead to a substantial increase in new listings. Bloomberg's senior ETF analyst forecasts up to 100 new U.S. crypto ETFs launching within the next 12 months, following the publication of new generic listing standards by the commissioners. This regulatory shift comes at a time when the market has fewer than 30 spot crypto ETFs and around 97 total crypto ETFs, including leveraged and derivatives-based products. Historically, similar implementations of generic listing standards have resulted in a tripling of ETF launches. This suggests a potentially exponential growth phase for crypto-related investment products on U.S. exchanges. Galaxy Research has identified 14 digital assets they believe will quickly qualify for expedited listings of new spot crypto ETPs. These include major cryptocurrencies such as BTC, ETH, XRP, Sol, BCH, ADA, Doge, LTC, Link, XLM, AVAX, SHIB, DOT, and HBAR. The SEC also recently approved the listing of the Grayscale Digital Large Cap Fund and evening settled options on CBOE Bitcoin US ETF Index and Mini CBOE Bitcoin US ETF Index. These developments are seen as aligning with a broader initiative to establish the U.S. as the crypto capital of the world, potentially driven by Paul Atkins' commitment to a Trump-era executive order. This contrasts sharply with the views of former SEC chairs Jay Clayton and Gary Gensler, who considered most initial coin offerings, ICOs, to be securities. However, Atkins' stance suggests a new era at the SEC, where most crypto tokens are not securities, with plans to introduce exemptions and safe harbors to accommodate crypto promoters. The SEC's revised generic listing standards are a direct manifestation of this new approach, aiming to double the number of crypto ETFs in the coming year and signaling a significant policy shift toward embracing digital assets within traditional financial markets. Stay tuned for a quick recap of all the stories we've covered today. And don't forget to subscribe to Talksy for all your breaking news needs. And that's a wrap on today's top stories. We saw MEXC's innovative Futures Earn product poised to revolutionize startup finance, France grappling with widespread protests and exposing deep societal fractures, and the SEC's new rules set to potentially double the number of crypto ETFs. Plus, a personal update from New Day Cafe offers a different kind of community connection. Did any of these stories blow your mind? Let us know in the comments below. Don't forget to smash that like button, subscribe to Talksy for more essential updates, and hit that notification bell so you're always in the know. Follow us on all our social platforms for behind-the-scenes content and join the conversation. Thanks for watching, and we'll see you in the next one.